Welcome to the Deep Dive. We're here to cut through the noise and get straight to the insights that, well, that really matter to you.
That's the goal.
And today, we're plunging into something that might sound a bit technical at first, the latest Producer Price Index report, the PPI. But trust me, this isn't just some dry economic number crunching. It came out just yesterday and today, and it's already got people talking, economists, investors.
Example, grocery store manager, probably.
Exactly. So our mission today is simple. Unpack these numbers, make this seemingly complex stuff surprisingly easy to grasp, and boil it down to the core insights.
Right.
So you'll walk away well-informed, without feeling totally overwhelmed, and hopefully with a clear idea of how these big economic shifts might soon show up in your own daily life.
And that's spot on. This deep dive is crucial because the PPI, it often acts like an early warning signal for inflation.
An early warning. Okay.
Yeah, when producers start paying more, it's a pretty strong sign those higher costs might be heading our way towards consumers. So this current jump we're seeing, it's something we really need to understand. We're committed to connecting those dots for you, making this info not just digestible, but actually useful.
Okay, let's do it. Let's peel back the layers. The headline number from this latest PPI report is, well, it's definitely an eye-opener.
It is.
We saw a 0.9% increase just month over month in the Producer Price Index.
Which sounds like a small number, but in this context,
It's huge. To give you some perspective, that's the highest monthly jump we've seen since, what, mid-2022?
that's right.
And it's the biggest single monthly increase in over 3 years. And if you look year over year, the PPI is now up 3.3%.
Yeah.
So just simply put, the PPI measures the average change in prices that producers, factory service providers get for their stuff.
Before it hits the retail shelves, it's that wholesale level price.
Exactly, the price tag before it gets to you and me in the store.
And what's really striking here, I think, is just how broad this increase is. It's not like, oh, lumber prices went up or one specific thing.
Right, not ice.
No, it's across the board. Both goods and services saw significant jumps. Goods were up 0.7% for the month. Services, even higher, up 1.1%.
Wow, 1.1% for services.
Yeah, that really points to widespread cost pressures kind of working their way through the whole system, the supply chain.
Okay, and you mentioned something called core PPI. What's that tell us?
Right, so core PPI is important because it helps us see the underlying trend. It strips out the really volatile stuff, food prices, energy prices, which can swing wildly month to month.
Yeah, gas prices are always up and down.
Exactly. And it also excludes something called trade services, think transportation costs, wholesale margins, things that can also jump around and maybe cloud the picture.
Got it. So the less jumpy stuff.
Pretty much. And guess what? Core PPI also surged. It jumped 0.9% in the month. That's its biggest spike since March 2022.
Okay, so the core's jumping too. That sounds significant.
It is. And year over year, core PPI is now up 3.7%, which is quite a climb from 2.6% previously. This points directly to what economists worry about: sticky underlying inflation. Sticky, meaning it's hard to get rid of.
Exactly. It's not just a temporary blip. It suggests these price increases are becoming more embedded, more persistent, like price hikes that have really taken root.
Okay, so if it's broad, it's sticky. The big question is why? Why now? And this is where it gets really interesting, isn't it?
It really is.
Analysts are pointing fingers, well, maybe not fingers, but they're highlighting a specific driver: tariffs. Tariff-driven inflation. The idea is, for a while, businesses were maybe absorbing these extra costs from tariffs, taking a hit on their profits.
Trying to shield the customer.
Right. But this latest PPI data seems to suggest, well, maybe they can't do that anymore. The dam has burst, perhaps.
That's a good way to put it. It looks like that ability to absorb has run out for many.
And we're seeing specific warnings, right? Like Oxford Economics said these wholesale price jumps mean tariff costs are being passed on now.
Yes, they were quite clear on that. And there was a note from Pantheon Macroeconomics, too, which basically said the same thing. Expect this wholesale inflation to hit consumers soon. How do they put it? Something about inventories rolling over.
Yeah, as inventories roll over and firms adjust pricing under margin pressure, basically, as businesses sell off their older, cheaper stock and have to buy new, more expensive inventory reflecting those tariffs, they'll raise prices.
So that's the mechanism. The pass-through is happening.
Precisely. When producers just can't cushion the blow anymore, especially from something like tariffs, which are essentially taxes on imported goods.
Right. Taxes businesses pay.
They really have little choice but to pass those costs down the line. This PPI jump, it's a very strong signal that this pass-through isn't just theoretical anymore. It's happening now.
And what that means, for you listening at home is that the impact of trade policies on everyday prices isn't just a future possibility. It seems to be arriving.
It's starting to become a reality, yes.
So, okay, inflation bombshell drops. How did the markets take it? Financial markets can be pretty skittish sometimes. Did they freak out?
Well, it's interesting. Surprisingly, perhaps, U.S. stocks are still, generally speaking, holding up pretty well.
Really? Even with this news?
Yeah, Thomas Salopek over at JP Morgan pointed out something important. Corporate earnings have actually been quite strong. Something like 81% of companies beating earnings expectations.
81%? Wow.
So that provides a cushion. Stocks can find some resilience even with rising inflation worries, but, and this is a big but,
There's always a but.
there usually is. That resilience holds as long as there's no recession. If the economy tips over, strong earnings might not be enough.
Okay, so holding steady, but with a condition. Did we see any immediate reaction, though?
We did, yeah. It was subtle, but S&P 500 futures did pull back a little bit right after the PPI report came out.
Oh, okay.
It reflects that growing caution in the market, maybe nervousness about what this means for interest rates down the line.
And speaking of that caution.
Well, we also saw Treasury yields tick up, and the dollar got a bit stronger.
Which is typical when inflation fears rise.
Exactly. Higher yields mean investors want more compensation for holding bonds if inflation might erode their value. And a stronger dollar can be a sort of a flight to safety move.
Right. So it raises a key question, doesn't it? How long can strong company profits keep propping things up if these inflation pressures keep building?
That's the multi-billion-dollar question, isn't it? It's a very delicate balancing act right now between that corporate strength and these broader economic headwinds like inflation.
And that balance, or maybe imbalance, brings us straight to the Federal Reserve, the Fed. What does this PPI report mean for them and their plans?
Oh, it definitely complicates things for the Fed.
Yeah, I bet. This surge seems to have put a wrench into hopes for a big Fed rate cut anytime soon, right? Especially like a big one in September.
Absolutely. Any market chatter about a half-point cut that's a 50 basis point cut in September, that's pretty much evaporated. Gone.
Off the table for now.
Seems like it. Now, a smaller cut, maybe a quarter point, 25 basis points, that might still be possible later this year.
Okay, so not completely ruled out.
Not completely, but this kind of hot data, as Chris Larkin at Morgan Stanley called it, it really weakens the arguments for the Fed to ease policy aggressively.
It makes it harder for them to justify big cuts if inflation is heating up again at the producer level.
Precisely. And Fed officials themselves have been voicing caution. Mary Daly from the San Francisco Fed, for example, she's expressed concern that if wholesale inflation stays high, it undermines the case for cutting rates significantly.
So they're aware. They're watching this closely.
Extremely closely. What's really fascinating, I think, is just how data-dependent the Fed is right now. They need to see clear, consistent signs of inflation cooling before they make big moves.
And this report just didn't give them that sign.
No, quite the opposite. It throws a bit of cold water on the idea that we are on a smooth path back to their inflation target.
Okay.
It definitely makes their job much trickier heading into their next meetings.
Okay, let's pivot now and bring this right down to earth, right back to your wallet, your grocery cart. Because while these percentages and basis points can feel abstract, there's one detail in all this that's likely going to feel very real very soon. Axios highlighted this, and it's pretty shocking.
Yeah, the vegetable prices.
The vegetable prices. A 38.9% increase month over month, almost 40%.
It's a staggering number.
And not just staggering, but historically so. Apparently, this is the sharpest summer increase in vegetable prices since 1947.
Since 1947. Just think about that.
It's wild. This veggieflation, as some are calling it, is a really stark warning that these wholesale price pressures we've been talking about, they could hit your grocery bill very directly, very soon.
And this specific detail, the veggies, it's so important because it makes it real, doesn't it?
Totally relatable.
It's a tangible example of how that producer price index we started with translates into actual consumer costs. It's not just a number floating out there. It's the price tag on your broccoli or your lettuce.
Yeah.
And if you connect that to the bigger picture, even specific spikes like this in essential items, like food, can really impact broader consumer sentiment.
How people feel about the economy.
Exactly, and how they spend their money overall. When food bills jump noticeably, people get nervous, maybe they cut back on other things. It has ripple effects.
Okay, so let's try and wrap this up and keep it simple, as promised. What are the main takeaways here for you, the listener?
Let's boil it down.
First, it seems pretty clear now. Tariff costs are pushing producer prices higher, and businesses are now passing those costs along. That pass-through is happening.
Check. That's key takeaway number one.
Second, markets. They're holding up for now, mostly thanks to those strong company earnings we talked about. But underneath, sentiment is fragile. People are watching inflation like a hawk.
Right. Cautious optimism at best, maybe.
Third, that core inflation, the sticky kind. It's proving, well, stubborn, still showing significant upward pressure.
Yeah, that underlying trend is still hot.
Fourth, the Federal Reserve. They're likely going to hesitate on any big rate cuts because of this data. Their job just got harder.
Definitely complicates their path forward.
And finally, maybe most importantly for daily life, yes, everyday consumers like you might feel these shifts soon, maybe starting with things like, well, your vegetable prices.
Veguflation is real.
So what does it all mean? It really just underscores that staying informed about these fundamental economic shifts is more important than ever right now.
Absolutely. And as you stay informed, there are a few key things to watch out for going forward. This raises some important questions.
Okay, what should we be looking for?
Well, first, will the next inflation reports, the CPI, Consumer Price Index, and the PCE, Personal Consumption Expenditures Index, will they confirm this trend? Those measure prices consumers actually pay.
So will the PPI increases show up there?
That's the big question. Also, keep an eye on any future tariff developments. Will trade tensions ease, or will they add more fuel to this fire?
Good point. Trade policy matters here.
And finally, listen closely to what Fed officials say, especially with the Jackson Hole Symposium coming up.
Ah, yes, the big central banker gathering.
Exactly. What Fed Chair Powell says there could give big clues about their thinking. All these pieces, CPI, PCE, tariffs, Fed talk, they're interconnected and will really shape the economy and your experience of it in the coming months.
It's a lot to track, but hopefully this deep dive helped make sense of at least this latest piece of the puzzle, simply and clearly.
Hope so.
Thank you for joining us today. Keep exploring, stay curious about how these forces are shaping your world.